Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Euro dollar. A bullish long white Mariposa yesterday and second bullish white soldier. This after a very confusing prior session combination of an immediate countering bullish Harami. There was also a possible shooting star pattern and even an inverted hammer pattern type. The base of the action was on the gold highlighted long moving average, currently at 108.70, and the 50% Fibonacci line for 2023 at 108.64, after the previous session's close over both the gold long moving average and the 50% Fibonacci line. Meanwhile, the top side was capped by the mauve medium moving average, currently at 109.45, and the 50% Fibonacci line of the January 21 to September 22 move at 109.44. Overall, the market continues to rise away from the late October horn bottom. However, please be aware that not too far above we have the bright red July 2017 to November 2018 head and shoulders neckline extension, currently at 109.76. So far today, an apparent, possible, massive, immediate countering daily key reversal down today. And we are set up for a possible weekly key reversal down as well, with also a possible daily bearish engulfing pattern today, if only just on the latter. If we close tonight below 108.77, then today will be an immediate countering daily key reversal down. And if we close on Friday below 107.93, then we will have a weekly key reversal down. The next support is the April 2020 low at 107.25, and that's being tested at the moment. And then we're coming into this congestion band, which is not fully defined, but stretches from April and June. And it goes from that 107.25 level down to about the 106.35 area, though it's not very well defined. We've just popped below that April 2020 low. Cable, aka sterling against the US dollar. A bullish engulfing pattern and bullish closing white Mariposa yesterday after the previous session's indecisive spinning top is a clear move higher up and away from the recent October based bear channel, currently 127.85 to 129.45, as well as a slowly rising mauve medium moving average, currently 129.90. This gives a potential market target X for this pattern in the 131.12 area, just under the short medium moving average, currently at 131.23, plus the congestion at 131.33 to 131.44, and the harder to reach secondary target X1 up in the 132.17 area. So far today, a complete reversal of this, an apparent possible massive immediate countering daily key reversal down today, as well as a possible daily bearish engulfing pattern today, if only just on this latter one. If we close tonight below 129.57, then today will be an immediate countering daily key reversal down. We are still some way from setting up, well actually we're not that far away from setting up a weekly key reversal here. But the next support is the November 2020 low at 128.52, and that is being tested right now. Beyond that is the long moving average, and that's at 128.13. Euro sterling. A counter to the counter bearish Harami yesterday after the previous session's immediate countering bullish Harami that had a long tongue on it. Though bearish, the market has found it hard to push down through the 83.81 to 83.86 congestion zone, containing the July 2024 low 83.81 and the declining short medium moving average, currently 83.82. Below we have the recent congestion all the way down to the 82.93 area, whilst overhead we have the declining medium moving average, currently 84.24, acting as a sort of cap, as well as the very recent 50% Fibonacci line there as well at 84.59. Now so far today, a strong follow-on lower to the previous bearish Harami, dropping down to the August 2020 low, punching through it, and that's at 83.38. Now this is a gateway to congestion, mainly October based, stretching all the way down to 82.93, and just ahead of the congestion between 82.74 to 82.79. I'm not sure how strong this will be able to cope with what the pressure is, but it is quite dense, especially in the latter part of October, which is obviously the more recent period. US dollar against the Japanese yen. A second bearish black crow yesterday, with the market fighting hard to test the combination of the very slowly rising gold long moving average, currently at 151.65, and the August 1990 high at 151.58. Additionally, we have a little overhead the bright red middle time, currently at 152.47, with a very flat late December 2023 to early August 2024 bullish shift pitchfork, as well as the surprising resistance of the lesser Fibonacci line at 153.40. Looking below, we have the very recent 50% Fibonacci line at 150.76, then the declining medium moving average, currently 150.15, and then the 50% Fibonacci line of July 23 to July 24 move at 149.61. All this ties in with the exhaustion of the move higher after achieving all the targets on the mid-August to early October reverse head and shoulders pattern. Now, so far today, an apparent possible large daily key reversal up today. If we close tonight over 152.13, then we'd be on. We're also set up this week for a possible weekly key reversal up this week as well. So if we close on Friday over 152.98, then we'd also be on. Perhaps the most interesting feature is the clear move above, up over the bright red middle time and up into apparent clear territory, stretching up to the June 1990 high at 155.78. There is some congestion end of July, beginning of August based, but not something necessarily I would be writing home about. So just be aware that there is really quite a free area all the way up to that June 1990 high. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow yesterday, a smaller one after the previous session's immediate countering bearish opening long black Mariposa with a very long tail on it. Prices dropped down to test the very recent lesser Fibonacci line at 709.99, but didn't really push down through it. Just below this is the very slowly declining short medium moving average, currently 709.50. Beyond this we have little in the way bar yesterday's low at 708.46 until the June 23 low at 706.57. Overall, two things to bear in mind. Firstly, we have not as yet broken up over the possible neckline, currently at 714.99, for the late August to end of October reverse head and shoulders pattern. And secondly, we are moving now well away from the break lower below the October base dark blue ascending wedge pattern. The primary target below for such a pattern is the 709.15 zone, which we have already reached, and the secondary hard to reach target X down in the 697.50 zone. Well, so far today, an apparent possible massive daily key reversal up today. We are set up for a possible massive weekly key reversal up this week as well, with also a possible daily bullish engulfing pattern today as well. If we close tonight over 1710.97, then we would have both a daily key reversal up and a bullish engulfing pattern. Additionally, if we close on Friday over 713.85, then we will have a weekly key reversal up as well. And we've risen so far through the medium moving average, that's trading at 716.08. We're up through towards the congestion over here, the combination of the May 2020 high, which is at 719.64, and the slowly declining long moving average at 719.66. US dollar against the Mexican peso. An indecisive doji cross yesterday, but one with a new high, one not seen since September 2022. This coming after the previous session's indecisive spinning top that was also a bearish Harami. Overall, the market continues to stride higher, above the massive supports below of the bright red lower time, currently at 1994.14, of the very important big picture April to July bullish shift pitch fork. The combination of the dark blue lower time, currently at 1977.56, with the recent mid-August to mid-September bullish shift pitch fork, which ties in with the purple neckline, currently at 1979.35, the late July to late September lopsided head and shoulders pattern. This is a head and shoulders continuation pattern. Then the congestion area between 1787 and 3/4 to 1791.31, containing the December 2022 high at 1991.31, and finally green short medium moving average, currently 1966.93. All these have held up repeated attempts to break lower over late September through to early October, so it was no surprise that prices are moving higher. Topside, we now have the dark blue middle time, currently at 20.41.76. So far today, what looks right now like a massive bullish open and close white Mariposa and bullish engulfing pattern. Prices have punched up through the dark blue middle time and the September 22 high at 20.57.65 to a new high not seen since August 2022, further validating both the dark blue and the bright red bullish shift pitch forks as being the primary arbiters for the angle of attack, bullish angle of attack of this market. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.